All right, so here's a journal entry on good, relevant backtesting courtesy of FX Replay software. And I want to focus on two discussion points for this journal entry, which is going to be profile signatures using Monday's range and Forex Factory, how to mirror a week's news event. So first off, with FX Replay, looking at Monday's range. And so this is just open chart backtesting. It's just basically trying to look at price signatures. And the one I am practicing this weekend is all about Monday's range. So it's not about the actual trading in the moment. I would consider that like another level of backtesting. This is really just about trying to find, mirror, understand the different signatures in price. So what I like to do is I'll take a full week, Monday through Friday, 4 p.m., and I will look at Monday's range. And I'm looking for two key things. Monday's range can be used for several different things, but the two I'm looking for right now, relevant to Monday's range, is specifically the use of liquidity and standard deviations. Those two things I find have given a lot of insight as to what we can use Monday's range for. So weekly profiles, safest bet, let Monday play out. Then we're looking at Tuesday's AM to frame up a possible trade in the PM. And then Wednesday and on, depending on the news events of the week, we can use that information that we've taken from the first 2 days of the week. So if we see Monday, in this example from 2022, I'm using FX Replay to kind of go back in time. I've marked out the Monday range from high to low. That's this gray line. And then I've used the standard deviations as the white boxes. So observations around liquidity and standard deviations. So I'm looking at things like when price sweeps the low, how does price react for the next day? So Monday creates a consolidation, and this is absent of any news event, but just looking at how liquidity is used and then standard deviations. I really like 1, 2, and 3 standard deviations off of Monday's range. If Monday was a fairly large range, respective to say the average daily range, then I'll be looking at 1 standard deviation. If it's a small consolidation, then I'm looking for 2 to 3 standard deviations. So I look at a week like this, and I'm like, okay, we started off with a Tuesday low, so numerically, the low on this candle was lower than Monday's low, so that's a Tuesday low. We saw a run up through Wednesday, but we didn't get up to 1.5 or 2 standard deviations. Something happened here on Thursday, and then a trade formed on Friday. And I'm saying to myself, okay, well, if somehow this moved down, then created this low, so we now have a new low of the week going into Friday, then there's no such thing as like a Friday low. So what we're really looking at whenever we see Friday making new lows is a retracement to go lower. And I use Mondays, and I'm looking at, well, I'm focusing on standard deviations and liquidity. So where does Friday's low go to? So I'll plot the deviations there, and I'll observe where does the low go to. We can see that we come just around 1 standard deviation on the low side, just as much as we went just about 1 standard deviation on the high side. So that's an interesting observation, right? We're seeing relative standard deviation swings. So from a swing point of a consolidation, we run up roughly 1 standard deviation, then we run down roughly 1 standard deviation. The other thing I like to look at is when you get these signatures where price is now breaking bearish. So let's take this off now. When you get these signatures where price is now breaking bearish and we've closed below Monday's low, so you can see that these 2 candles here close below Monday's low. Then I look at, well, what's this simple way? Simplest way to form retraces is going to be off of a daily candle. But I also like to use that Monday to see, well, where am I coming back to? So Monday's range is holding a lot of insight from liquidity purposes, so sweeping and then running higher based on the deviation. Then from Monday's range, setting out some sort of goal when price starts to break below. I also like to use the daily candles level. This is from a friend of mine, Tina. So she had this great, simple, beautiful way to set retracements, which is taking the previous day's candle. So the mechanical candle, 6 o'clock is when that new day opens on a candlestick until 4 p.m. the next day. So here's the low at 4. And what you're basically doing is you're taking a daily candle and setting out your retracement levels. So we know we've got a 23 to 38 retracement level, OTE for premium. So a 23.8 kind of sets off a rapid continuation. And so using those simple techniques to say, okay, well, I like to use Monday. I can see the 23 to 38 getting hit. The New York Open kicks off. If I were to zoom down, would I be able to see a pattern expecting that price is going to be bearish? This is a retracement to continue bearish. And I'll be looking at the deviations used previously in the week. So I like using Monday's ranges, and the journal entry is just about what am I looking for when I say that I'm looking at Monday's ranges. Another example is where we're taking the Monday range and then starting to incorporate some of our simple understandings around weekly profiles. So weekly profiles are they're the jam, man. If you're not on weekly profiles, at least somewhere in your toolkit, you're really missing out. So same idea, Monday's range, and we're looking at it to be a liquidity, a matter of liquidity. So we can see that Tuesday stays completely within Monday. So not, this is absent of checking any news events. That'll come in a separate section today. Then we see Monday's low get taken. We look at the deviations on Monday. We can see that on Thursday, we create a Thursday low at the deviation, so that dotted line going straight across. And then when we see Thursday lows and then the New York Open kicks off with whatever 8:30 news event, not taking any more lows, well, first off, we didn't have a buy side grab to suggest a Tuesday high. So from a profile perspective, we've eliminated a Tuesday high, but we could still have a Monday high where price just is a freight train running all the way down for the rest of the week in one direction. But what's interesting is when we reach that level, that deviation level, we stop taking lows. So you can see this wick, which took out this wick, we stop taking lows after we make a market structure shift. We go very deep into that retracement, but we do not take the low. Then on some news event, whether it's 8:30, we start to shift higher. We shift higher, we shift higher. And what we did was basically reclaimed this liquidity. So this SIBI gets shifted, then revisited. And using that Monday's range information, so this fair value gap here, once it breaks above, it revisits it 50% level. And using that range information, we're saying, all right, well, if we are shifting structure by taking back this SIBI and inverting it, by not taking any new lows, by having a weekly profile where we're now saying this could be a Thursday low, well, a common occurrence of a Thursday low is to go back to Tuesday's high by the end of the week. So just watching to see how does Tuesday's high get respected. We can see we have a nice run up through Friday. And then we're also watching the levels on Monday for how would price then react on the buy side of this curve on Monday's low. So when we dip below it, we reject, come back up, retest it, and then start moving towards some internal liquidity. We don't take the buy side on Monday's high, and that's fine because the Thursday low to take Tuesday's high is a common occurrence on a weekly profile. And again, framing it up on, well, when I get to a standard deviation off of Monday, then what am I seeing? So when I get to that standard deviation at 2 a.m. on Thursday, and I'm thinking this could just be a London protraction, dipping below Asia, shifting market structure once, but not clearing the fair value gap, not clearing the SIBI, failing to take the low, then rejecting any bullish sentiment, clearing and closing above the SIBI, revisiting the 50%, and then having a PM trade as a level of distribution. That distribution clears Monday's low, revisits it, and then clears Tuesday's high. So that's really cool. And like I said, again, super simple way, courtesy of Tina, is to take that previous day's range. So I'm looking at that daily candle from 6 p.m. Wednesday, which is the mechanical start of that daily candle, going up to the high. And I'm looking at how does price retrace the next day. So I'm looking at 6 p.m. to 4 p.m., 6 p.m. Wednesday to 4 p.m. Thursday. That's my daily candle. And if I see fast retracement levels, so the 23 to 38 or below the 50% at the OTE, ICT style, then I can use that information coupled with Monday's range to frame a reason to want to be bullish. So I've got Monday's standard deviation being respected. All throughout Thursday, that was a bullish run. We're back above the Monday low. So classic time range stuff. You have a range, break below the range, you come back into the range, then you're looking for an inefficiency to then take or trend towards the next side of the range. So all of that couples together for a Friday trade. So backtesting with relevance, really just framing things out, every weekend is really good just to keep it simple, use the same things over and over, and really hone it in. Last example, let's go back to last week real quick. So last week was another beautiful example of how this information plays out. So same idea. Open book backtesting, open book. So Monday's range, you can see that Tuesday took Monday's high. Then we broke below Monday's range. And we've got levels of deviation to look towards. I like 1, 2, and 3. If I see price reaching to a deviation level, so the dotted line where the crosshair is on Thursday, then I'm looking at Thursday to see, well, what happens next. This low is defended. I use my retracement, and I'm looking to see where does price get to going into Friday. Now this is a Tuesday high. So unlike our first example where there was no Tuesday high, a Thursday low would go to Tuesday's high when Tuesday is within Monday's range. When you have a Tuesday high, meaning we broke out of the range, then really all we're anticipating is for a small retracement back inside of this bearish leg. The last thing I think is really cool, backtesting with relevance, is using Forex Factory to its full potential. So this is the upcoming week for July 28th, 2024. And what we're looking at is a bunch of news with no Monday. It's a non-farm payroll week. But how can we use this to our advantage to backtest? So here's something I like to do. Take one of these news events, look at the folder, and it will tell you the history. You might have to click the more button to give you more information. And you want to find another time that this event happened on this day or date. So I'm looking for a JOLTS news event on a 30th. So I'm looking through the history and I see that January was the last time we had JOLTS on a 30th, meaning the end of a week. Typically it's going to be the first week. But we want to find one that's the closest to the week we have. And so I can see January 30th had it, so I can click on that, pull up the information for the entire week, so the 29th until the 2nd of Feb, and I can see very similar type of week. No news Monday, Jolts Tuesday, NFP Friday. And then I go to FX Replay. In this case, I'm going to use TradingView because it's not that far back. And I'm going to go to January 29th, Monday. And here we go. We have a week that is similar to the week that's coming up. And the point of it is not that the profile is going to match. That's not the point. The point is not that the profile is going to match. The point is, when is the liquidity injected? And we can see, as you would expect for an NFP week, that it's more of a midweek to the back end of the week where we get most of the juice. So not surprising if we saw consolidation through Monday AM, not surprising if we saw a PM session set up, not surprising if we saw Tuesday just annoying the heck out of people with all of this consolidation. This is an hourly chart. And then I would not be surprised if I saw my setup forming in the back end of the week into Thursday and into Friday. So in this case, this would be a Wednesday low. Wednesday low kicks off Thursday to get back above Tuesday's high. And the same idea with this back testing is to say, what are my standard deviations off of Monday's range? See my high, my low. And again, it's back testing with relevance. It's taking that information and trying to use it to our advantage, where we're going to take that visual cue. It's not about literally the testing or the trading right now. It's just marking out the areas of relevance for the profile. So here we have one standard deviation, and we can see that price didn't quite get to the one deviation on the low, and similarly didn't quite get to the one deviation on the high. But using Monday, we can see when price went below. We can track when price went back above, and the same measure that it went below is the measure we'd expect it to go above. So just about one standard deviation below, price broke back above Monday's low here. So we're expecting price to then get back to just about one standard deviation above the high. All right, and that's it. Happy trading, and we'll do it again.